Hello and welcome. Today, we're diving into Goldman Sachs. On January 17th, the company released its full year and fourth quarter 2022 earnings results. Goldman stocks plummeted right before the earnings announcements, but at the time of this production, the stock price recovered to around $350. Goldman Sachs missed profit estimates. Citing Octavio Marenzi, CEO of consultancy Optimus, Goldman Sachs quarter four results were even more miserable than anticipated. So stick around to get some insights, as we are about to review Goldman Sachs 2022 earnings results. Yes, Wall Street definitely had a bad year. No doubt about it. And Goldman, long regarded as the most renowned of the large investment firms, is definitely feeling the brunt of the impending squeeze on employment and compensation. The company is currently running a leaner budget by cutting operating costs. Recently, Goldman began a large round of layoffs, planning to cut up to 3,200 jobs, and also considered slashing bonuses for investment bankers by at least 40%. John Waldron, president of Goldman, defended this cost-cutting by citing concerns about a recession in 2023 and anticipating other businesses to follow suit. Firm's 2022 net revenues were significantly lower compared to a record 2021, reflecting higher than expected revenue drop both in asset and wealth management and global banking and markets. To be more specific, profit for the fourth quarter plunged 69% from last year, reflecting higher provisions for bad loans, 16% drop in net revenues, and 11% higher operating expenses. Both earnings and quarterly revenues missed analysts' expectations, as I mentioned before. Goldman's investment bank also pulled back from a foray into retail banking due to declining revenues and a series of embarrassing allegations over the treatment of female employees. Firm's investment banking fees fell 48% in the last quarter, while revenue from its asset and wealth management unit dropped 27% due to lower revenue from equity and debt investments. Net earnings applicable to common shareholders declined to $1.33 billion or $3.32 per share from $3.81 billion or $10.81 per share in the prior year quarter. 2022 return on equity was 10.2%, yet the fourth quarter showed only 4.4% return on equity. So the end of 2022 showed a poor return for Goldman Sachs. Before diving deeper into Goldman Sachs 2022 numbers, let's take a peek into its dealings. Goldman Sachs is a well-known multinational investment bank and financial services company established in 1869. Twitter, Bumble, and Robinhood Markets are a few notable public offerings for which Goldman Sachs served as principal bookrunner. Spotify, Foodpanda, and Dropbox are further examples that the business has backed. Then, the World Economic Forum counts Sachs as a partner organization. We should give Goldman Sachs some credit. In spite of a decrease in completed merger and acquisition deals throughout the sector, due to the fast-changing business climates brought on by geopolitical instability and decreased investment banking revenues in 2022, Goldman Sachs still remained number one in announced and completed mergers and acquisitions. When close to half the companies in the United States have price-to-earning ratios above 15, the Goldman Sachs Group Inc. still looks attractive for investment with its latest 12 months P/E ratio of 11.4 as of the 24th of January 2023. No matter how bad the fourth quarter of 2022 was, in 2022 as a whole, Goldman had the second highest annual earnings per share, $30.06, and second highest firm-wide net revenues. The company had a return on assets of 0.9% over the past year. This is average for industry returns. Overall, Goldman Sachs looks like a decent long-term buy from technical and fundamental analysis views, especially considering all the cost-cutting that's happening right now in the company. They clearly see where they are and what to do. Yes, it may seem chaotic from the outside, but the company's management prepared for the storm in advance. So it's not the condition Goldman Sachs is in now, but it's management's capability to drag the company out of the mess. And keep in mind that you can always keep an eye over Goldman Sachs and other companies and invest using our platform. Check the link in the description or simply scan the QR code on screen. However, please be aware that we're not giving direct investment advice or soliciting the purchase or sale of Goldman Sachs shares. We're simply looking at the numbers to increase public awareness. This has been the Investment Brainstorm. I'm Riley Tanner with Dukascopy TV. Thank you for joining us. And if you found value in this video, please like, subscribe, and share it with others. See you next time.